Hey y'all, welcome to Layn Turo University. It's Conrad Layn here. I'm going to go deep and dive into how to handle insurance claims. So it's part of business. It's going to happen, and part of business is risk. You can't have money and business without the risk, and risk without the money. Just kind of how it is. It's part of the same club. So know that when you start a business, you're going to have unfortunate events occur, especially accidents in this industry, but it's about how to safeguard yourself and offset the risk. The better you become at offsetting the risk and strategizing, you'll be able to significantly reduce the likelihood of you having to actually lose in a situation like that. And if you do, it's just part of business. But I'm gonna teach you how to actually safeguard. Here's a few tips. The first tip, first and foremost, you gotta know which insurance policy you pick. So through Turo, there's the Turo 60, the Turo 75, the Turo 80, the Turo 85, and the Turo 90. There used to be a Turo 70, but has been since removed and it's been turned into the Turo 75. So now the Turo 60, which has a $0 deductible, which is fairly safe. I've had that, I've used that. I'm currently on the Turo 90 now, but the Turo 60 was great. So that means anytime my vehicle was damaged or in an accident, I paid nothing out of pocket and I didn't have to worry about really anything, which is great. The only problem was that you pay 40%, which sucks because say if I charge a daily rate of $100, I basically only make $60. So that's reduced 40% from $100, unfortunately. So that really sucked. But it was a great privilege to have the Turo 60 for the time being, because basically if anything happened, I didn't have to worry about anything. No matter how minor the accident was or how significant the accident was. I didn't have to pay, I paid $0, which was nothing out of pocket, and they give you a loss of use, basically where you get trip coverage. It's kind of like, it's really what is called business interruption insurance. And essentially they average out based on the amount your vehicle's been out and amount of money you've accrued for that business, and they pay that to you, which is really cool. It's the only plan that actually offers that basic business interruption kind of loss of use type pay. Besides that, I'll move on up. So if you have that, you have really nothing to worry about, but you're going to be paid 40% of all daily rates. The next plan is actually a Turo 75, which has a $250 deductible. The $250 deductible is significantly is not that significant and really can safeguard you because you get a good amount of coverage, but you have a $250 deductible, meaning that you have to pay $250 if an accident would occur. So Turo pays anything above the $250. I'll move on to the next one. So Turo 80, you basically pay a $750 deductible, and that means anything above the $750 Turo pays, and you're responsible for $750. Same applies as the Turo 75 and Turo 80. Let's move on up. The Turo 85 is a deductible of $1,625, where you pay $1,625, which is $1,625 for the accident at hand. Turo pays anything above the $1,625. Now let's move on up to my plan, the beautiful Turo 90, which is the most risk that you're going to adhere to. But the thing is that even though I have a $2,500 deductible, which might seem pretty significant, I've done the math, I've done the calculations, and I realized that based on the likelihood and percentage and reverse engineering and a lot of market data I've done, it's very unlikely for me to have to use that deductible. So I've chosen to use the Turo 90. So now it's up to you. You don't have to pick the Turo 90. You don't have to pick any of these plans. You can actually take your time, pick the one that works best for you. Every market's different. But the thing is that for the Turo 90, that works for me so far. So that's what I'm currently on. But I'm gonna give you an extra tactic, and I left a few videos below, and you can actually watch these videos and it'll give you more tactics. But it's something I call the Turo Dynamic Insurance Strategy. I'm going to elaborate. I'm one of the first Turo hosts to actually mention this. It's a strategy, and the reason I came up with the strategy is because I've been insurance licensed for over 8 years. I'm also real estate licensed. I have a background in finance, so I know a thing or two on how to actually safeguard yourself. And I'm actually a business consultant, and my specialty is business is actually insurance mitigation, which basically means I strategize for in regards to risk reduction. So I'm hired on as a consultant to assist businesses on how to reduce their risk, because the more risk you reduce, the more you can actually accrue, and the more finance you can actually build and wealth you can build for yourself. So this first tactic you want to implement is always know this, and know this very well. Insurance works like this. You actually don't have to pay a deductible. That's actually a fairy tale. Yes, there's a deductible, but this is a trick though. If you actually become friends with body shops in your locale or municipality, state, or province, wherever you are, wherever this video goes, get to know the body shops personally. You actually have to pay them. It's not that you pay Turo. This is how it works. For example, if your vehicle is going through a claim, right, and there's $10,000 worth of damage, right, and you have a $500 deductible, for example purposes, you have to pay the body shop $500, and Turo will only pay $9,500. So basically, simply put, Turo only pays whatever the negative effect of what you have to pay it. So if you have to pay a deductible of whatever, let's say $2,500, and same scenario, say it's $10,000. That means Turo will only pay max $7,500, so which is $7,500. You actually are responsible to pay the body shop $2,500. You get what I'm saying? You never actually pay Turo. You never do. You actually pay the body shop. Turo only pays up to that amount. It's a fairy tale. So the reason I say that is because, like I said, I've been in insurance for over 8 years. I have quite a bit of experience. I'm also a business consultant. I know what I'm talking about. So you actually don't have to pay a deductible. What you have to do though, you have to actually contact the body shop and you tell them this and you say this, hey, look, I actually don't want to pay this deductible. If I bring business to you and I'm in the rental car industry or the sharing economy or whatever way you want to sell yourself, you go to the body shop and say, look, I own multiple cars or I own one car, I rent it out. And anytime, I'm gonna give you an exclusive agreement where anytime I have an accident, I'm only gonna bring my car to you and no one else. You have to make it appetizing for them. And if they say yes and agree to this, it's gonna make your life so easy. This is how you actually remove the deductible, and essentially you actually bring your deductible all the way down to zero. Now you just actually created a Turo 60 plan for yourself without having to pay 40%. That's the hack. So at the end of the day, you actually don't have to pay a deductible. All you actually have to do is contact the body shop and say, hey, I'll bring this business to you. They're gonna pay $7,500. My deductible is $2,500, for example. Can you repair my car for the $7,500? And if they say yes, that's okay. They did that for you and you negotiate that, that's fine. You can actually do that. Same example applies if, say you have $500 deductible. It doesn't really matter what your deductible is, but if you say you have a deductible of $500 and say Turo's gonna pay $9,500 of that $10,000, all you have to do is basically negotiate with the body shop and say, hey, look, I'm gonna exclusively only bring my cars to you, so you're in constant get business. I'm in a business that there's gonna be a lot of claims because it's just the nature of the business. And hey, I'll give you this business, so Turo's gonna pay you $9,500, but you just have to offset and take away my deductible, or don't require me to pay you this. Or you pay yourself. And if someone wants to give you like some type of feedback, say, hey, oh, that's illegal. No, it's not. It's actually not. It's called negotiation. And even if someone wanted to say, hey, that's wrong, no, it's not. But at the end of the day, however, the body shop, they could take that as a loss and put that actually off and offset their taxes. So whatever deductible they give you, if they want to do that or not, depending on how savvy they are, they can actually offset that with their taxes. When they file their taxes, they can actually say, I gave, for example, Conrad Layn a $500 discount, or I waived the deductible, or the body shop paid it on your behalf. Basically, whatever way they want to word it, it actually benefits them too, because they can offset taxes. Now, I'm not your tax advisor, I'm not your attorney. I know my own situation, I don't know your situation. I'm just giving you my opinion, perspectives, and from my expertise on how to take care of this. But always do your due diligence. I'm just your friend on YouTube. I'm not gonna tell you what to do or what not to do. I'm just sharing another perspective. So that's a way you can actually do this. And to really tie this up in a pretty knot, what you need to do is contact Turo as soon as possible and be transparent. How about this? Be honest. Tell them, hey, this is what I'm gonna do. I have a claim. I know you guys are gonna pay this. I'm gonna negotiate with the body shop and they're gonna take care of the deductible. Either they're gonna pay it for me, or either they're gonna offset it, tell me I don't have to pay it, and they're gonna take it off their taxes. Or hey, you don't even get that complex or in the intricacies of this. You can actually just state, hey, I'm gonna do this. You guys are gonna pay, and I'm not gonna pay a deductible to the body shop. The reason you want to do this, you want to make it transparent so that Turo at the end just knows. Now, it's up to you if you want to do that or not. You don't have to, but I would do that if I were you. I'll just notify Turo that, hey, this is my arrangement. I have a body shop. You're not telling Turo to pay anything more, right? You're not telling them to pay $10,000. You're only telling them to pay $9,500, which they're liable for. You're only telling them to pay, for example, if it's a $2,500 deductible, then you're telling them to only pay $7,500. So it really doesn't matter. They're gonna just pay their part and you're gonna negotiate. You just wanna make it transparent to Turo to let them know you're doing, so that there's no confusion. That's all this is. These are hacks and unorthodox strategies that actually work. And that's why the smarter you are, the more intelligent you are, or the more strategy you have, even if you're not intelligent. And this isn't a classist type of situation, or I'm not judging someone's mentality or IQ. It's not that type of video. It's just simply stating that the more you know is how you actually get through this. What you don't know always hurts you. The more strategy you have is how you offset costs, how you offset business, how you offset taxes. This is how you actually win. This is how you become wealthy. So always understand that in regards to actually managing a risk, especially in this industry and managing accidents and car accidents, you always want to make sure to contact and become friends with your body shop and significantly do this. That's how you do this. And I left a video below on which I call what I titled "How to Become the Body Shop." It's basically a play on words that represents my ideology that I just implemented and taught you guys. Next strategy is another one called the dynamic insurance plan. So I left that video below as well. So how to become the body shop is basically where you basically essentially become friends with the body shop and remove the deductible, because they don't charge you deductible. Turo pays their part, but they basically pay on your behalf, or they offset it, which you can totally do, but always notify Turo. Second is how to actually pick a dynamic insurance policy. So if you don't know which insurance policy to pick, that's a very good question. Actually, it's hard. This is a hard business. You might not know, but it actually can be. So what I highly recommend is to watch the video below, but also to consider this ideology that I've implemented too. I created this. I'm one of the only few Turo hosts to actually mention this. Check and look for it. You'll start probably hearing more about this, but I'm one of the first and few to actually implement this. And it's only because I'm real estate licensed. I'm also insurance licensed for over 8 years. I was also a SCORE mentor for the Small Business Administration, where I actually assist with CEOs, execs, small mom and pop shops, all of the above, big companies, small companies, and I'll actually assist them with business strategy and execution. That's my specialty. I was also HUD certified for a 501c3 nonprofit named NACA, which helps people actually acquire homes that might not be the most savvy on how to purchase a home, and might not be the traditional best candidates for a home. That's our goal. So that's what I did. So I have quite a bit of unique perspective and experiences. So totally download everything that I'm saying right now. Rewatch the video, learn from it. You're downloading a percentage of my brain, basically. Very little though. I know a lot more, but there's a lot of information, and I'm just sharing the archives with you guys, sharing the secrets. But the next step you want to do on how to pick the proper Turo insurance plan, which I left below, is that, how about this? Okay, as I mentioned, the Turo 60 is a $0 deductible. Very attractive, but you pay 40%. I just taught you how to become the body shop where you create your own Turo 60 where you pay no $0 deductible because you negotiate that with the body shop, but you keep basically 90% or whatever the percentage of money more. You don't have to pay that 40% for a Turo 60 plan. So what you need to do, and what I strongly recommend, and I left a video below that goes into my ideology, is that, how about this? How about consider the fact of, how about to start off with the 60, right? You can start off with any plan you want. Remember, I'm just your friend on YouTube, but start off with the 60 plan, so you have a $0 deductible, because that would really suck if you put on, doesn't matter if it's a commuter car, a basic car, a Ferrari, a Tesla, doesn't matter if it's a beautiful car or not. Doesn't matter what it is, if it's worth a lot or worth a little bit. Doesn't matter if you bought it cash, doesn't matter if you bought it with financing to own, doesn't matter if you leased it, I don't care. Doesn't matter. All that does matter is at the end of the day, however, you must pick the right plan. So what you got to do, and what I strongly recommend, is, how about this? How about attempting to figure out how to actually change the dynamic of insurance, and instead of actually picking one policy, how about you actually do your part and you actually say, hey, you know what, I'll try the Turo 60, and after I get accrue and earn $250, I will move up to the Turo 75. The reason why $250 is so important, because $250 is basically the deductible for the Turo 75 plan. The Turo 75 plan basically you have to pay a $250 deductible. So if you become the body shop or not, and if you have a deductible or not, you at least want to safeguard yourself. So worst case, if the body shop doesn't agree with you, or you just can't negotiate that well, or you just don't have the opportunity, whatever, you just need to pick a body shop right now, maybe they close down. You always want to at least have that in your reserves, and that's money you never touch. Save $250, which is the Turo 75 plan. And so after you basically earn $250, you move up to the Turo 75, because it would suck to start off with Turo and say you basically, your car gets destroyed on the first trip or first few trips, and now you're out of pocket, like basically like all this money, like say you chose a Turo 90 right away. Then now you have a $2,500 deductible. You haven't even earned that much. And that's what happens if you choose the Turo 75. You have $500 deductible. Maybe you haven't even earned $500, and now the car is destroyed. You know, and now you have to pay basically the difference. You know what I mean? Or maybe you have to pay a deductible, or maybe the car is total loss, and now you're left holding it back because we drive the car off. Basically, it's now you have to pay the negative equity, because typically insurance only pays for what the car's value is, but if you drove it off the lot, it loses value. So now it's negative equity, where they'll pay what the vehicle's worth, but they won't pay the rest of the loan that's owed. So you can have a loan, say for example, for $10,000, to keep it simple, and the car's for $10,000. You drive off the lot, it goes down to $7,500. Turo Insurance will pay $7,500, but you're left holding it back with $2,500. Not fair to you. So what I would recommend, instead of doing that, how about this? How about you actually start with the Turo 60, So no matter what happens, you actually have a $0 deductible. Yes, you're paying 40%. This is a dynamic approach, though. So yes, you have 40%. Yes, you're paying 40%. But by the time you accrue $250, how about this? Then move up to the Turo 75. Then same thing, rinse and repeat. Keep it on Turo 75 and save that 250 that you never touch. So if something happens, you have a $250 deductible, and then now you move up, and then you until you earn the next tier, basically, which is for the Turo 80, which is $750. Once you earn an additional $500, which is for the 750 deductible, and once you get that 750 deductible, you can actually keep that, put in the reserve, save it, don't touch that money, and then now you can move up to the Turo 80 plan with the $750 deductible, and then now you want to move to the Turo 85, which is a $1,625 deductible. Same, rinse and repeat. Keep earning money on that plan until you get to $1,625, and then now you can actually move up to Turo 80, the Turo 85 now, and the same thing, rinse and repeat. Keep working until you get to Turo 90, until you earn $2,500, and then you can move up to Turo 90. Now you're earning 90% of the daily rate. You're only paying 10%, but you have $2,500 in the reserve just in case anything goes bad, and now you're building wealth. That's how you do it. That's how you select the right plan. And last but not least, always consider getting gap insurance. Gap insurance could be a funny thing, though, because oftentimes they might not qualify or cover a commercial usage or commercial exposure. So to safeguard yourself against this, what you need to do is contact commercial insurance, gap insurance providers, and also personal insurance providers. Gap insurance providers is oftentimes they might have a commercial line, meaning a commercial side of their business that they do cover this. You just don't know about. You just have to call the gap insurance company themselves and ask them this, or look for a commercial gap insurance policy. And the way you find them is it's hard to find them unless you're a rental car company. You have the expertise. You go to a rental car company, book your trip for a day with the car, run some errands, whatever. But the reason is you want to go there, speak with the say Avis or Enterprise. Go to a traditional rental car company, Enterprise, Avis, Hertz, etc. Speak with the staff there and ask them what companies do they use, and then if they give you the information, voila, you got your commercial insurance providers. Now you can contact the commercial insurance providers, contact the commercial insurance gap insurance people, and now they can actually you can contact them and ask them about that and purchase it directly from the company. That's a huge hack. Or you could book the trip. If say for whatever reason the Avis or Enterprise or Hertz people don't want to tell you anything, you book it, you add on rental car insurance. Anytime you have rental car, they always offer rental car insurance as an extra sell. Add it on just to get information. Now you have the insurance policy. Now you have you contact these insurance companies that are commercial related, and you ask them, hey, how much does it cost to purchase it? That's it. That's how you find commercial gap insurance, or at least contact your gap insurance provider and see if they have a commercial side, or if they even cover this. And some gap insurance do cover it, even if it's commercially used. Like I said before, as soon as you drive the vehicle off the lot, you lose a percentage of what the value of the vehicle is. And if you finance the vehicle, if you leased it or finance to own it, the Turo or the insurance company or insurance company will only pay what the value of the vehicle is, unfortunately. And that's the key right there. You're left holding it back for the negative equity. And in real estate, there's something called being underwater. Underwater simply means that a house that you purchase is worth less than the actual loan. The loan's more than the house. So if something happens to the house will get paid up to a certain amount, but you still owe the negative equity in the loan. That's the unfortunate part. So you want to safeguard yourself against that. But I know it's a lot of information, but that's how you manage claims. That's how you do it. And then most importantly, in real estate or in Turo or purchasing a car, you always want to buy a deal in the wedge, it's called. It means buying a deal below market if you can. Compare, try to get the best deal you possibly can. Because the best deal you get is when you get it in the beginning. That's when you have the most power, is in the beginning of a deal, never at the end. At the end, you're at the mercy of an insurance company or other people. Always understand you have the most power before you buy something to negotiate the price down. If you negotiate the price down, you can actually get it at a much lower rate, so that if it goes through a claim, regardless if you got a loan or not, it's easier to pay that loan off and easier to get it covered, or to pay the negative equity, or there won't be no negative equity because you got such a good deal to offset that. A lot of information, I know. Get your head wrapped around it. That's how you do it. That's how you manage claims, people. Like, subscribe, share. Love you guys. Conrad, Layn out. Peace.